Crypto does not feel overly exuberant to me. This does not feel like 2017. It does not feel like 2021. It's still the case that most institutions don't own crypto. I think that will change in the next 4 years. And they have a lot of money. And I've been a fan of the 4 year cycle, and you can't dispute that it's been true. The risk I see for people who feel strongly that this 4 year cycle will repeat is that they'll step out of the market and then the market will pass them by. So I think 70% corrections are in the past. I don't think we'll see that again. The core reason I think it won't be true in 2026 has two halves.
Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company, sponsor, or projects discussed. Hey everybody, Pete Rizzo, the Bitcoin historian on X here with another great episode of Supply Shock. We've got Matt Hougan, Bitwise's chief investment officer. You know him for being out there on X and in the media, evangelizing for the Bitcoin and crypto market. Today we're going to be diving deep into his theory about the 4-year Bitcoin cycle. If you've read my work, you'll know that I am a big believer in the 4-year Bitcoin cycle. Matt here has declared it's dead. We're moving on. We're moving in a new paradigm. I am excited to share some new thoughts on this as well. Maybe ready to capitulate on the 4-year cycle after all these years, but stay tuned and definitely smash that like and subscribe button if you're staying tuned and watching the episode. Matt, welcome to the program.
Oh man, it's amazing to be here. I can't wait for this conversation. Let's go toe to toe on the 4-year cycle.
Well, let's give some context to the people who are listening, right? So there's this idea within Bitcoin that the halving, the sort of the programmatic nature and reduction of the Bitcoin supply is the catalyst for price action, and that has sort of metastasized into these 4-year cycles, right? So we'll see sort of a boom period, somewhere after the halving, and the supply is programmatically reduced, and we'll see a decline as euphoria kind of hits a peak and subsides. That's been what we've been experiencing since 2010, 2011. Myself, my first bubble was 2013. I like to say I'm a Bitcoin 2013 bubble baby. And I watched it happen again in 2017 and 2021. And, I will preface this by saying, I had the feeling going in this year, I said, 2025 will be a bull market as far back as 2022. So when they were carting Sam Bankman-Fried off, to the institution. In my head, I still, at that point, if you had asked me, I would have said 2025 will be a bull market. Here we are. So, it's a bit of like a colloquialism, right? It's my folkish, 4-year faith in the cycle has served me well. So why should I abandon it, man?
But it's a good point. I've been a fan of the 4-year cycle, and you can't dispute that it's been true, right? 2014, 2018, 2022, all terrible years. The core reason I think it won't be true in 2026 has two halves. On one hand, I think the forces that have driven the 4-year cycle are weaker today than they are in the past. You mentioned the halving. I think the halving is programmatically half as strong every 4 years. And you can make arguments around that. But if you think out 50 years, you have to imagine the halving is not that important. We're not talking about very much Bitcoin before and after each halving. So I think the halving force is half as strong. We've also historically had rising interest rates in 2018 and 2022. I think we have falling interest rates this year. And then we've had blowups as well, FTX you mentioned, in 2022. And I think those are less likely now. So I see the forces that drove it in the past as weaker than they were in the past. And then on the other side of the equation, we have these much slower but very large forces that move on decades-long timescales. So the institutional adoption of crypto, which really kicked off with the Bitcoin ETF, started in 2024. I think that could run for 5 to 10 years of ever higher and higher flows. We have pro-crypto regulation. I think the impact of that will be felt over 5 or 10 years. So it's not that I don't think the forces that created the 4-year cycle in the past still exist. I think they do, but I think they're weaker. And now we have these 5 to 10 year forces that I think are stronger. And as a result, I'm not calling a super cycle. I'm not saying we've repealed volatility, but I think 2026 is going to be a great year. I think 2027 will be good too.
Interesting. Well, I think I'm aligned on and ready. I'm getting there, right? I'm accepting that I might have to change my mind. But I will say maybe my strongest rebuttal is that I think the 4-year cycle to an extent just seems psychological, right? At some point, we all can, or maybe we can't, envision a scenario where regulation gets passed in Washington. Banks, financial institutions are adding these products. Bitcoin treasury companies maybe getting a little too overexposed with risk, ratcheting the price up. And then there's just a natural 50 to 60% correction at some point, just because, we are, what's the phrase that the investors love, or Kathy Wood has said it before, the animal spirits, right? That
Yep.
we're sort of governed by emotion, and the natural ebb and flow of emotion is just that we might hit a peak euphoria at some point. But it sounds like you don't think you think that that can be offset by these other forces.
I think it can be offset by these other forces. One fun fact from Bitwise is our average client allocates after, I think, 8 or 9 meetings with us. And that makes growing the business a long task, but it's paid off over 8 years. But if you think about an institution that just started thinking about Bitcoin when the ETF launched and does quarterly meetings, their eighth meeting will be in January of 2026. They'll be just entering the buying phase. So I agree, you can have these animal spirits. We may have pullbacks. There may be a little bit of exuberance in the Bitcoin treasury market. I would say that crypto does not feel overly exuberant to me. This does not feel like 2017. It does not feel like 2021. It feels more early stage in terms of the cyclical excitement outside of the treasury space, which I agree there's a little bit pipping up right there.
I was gonna say the Tron IPO really did give me a little bit of a flashback.
I agree. I agree with that, and I think there's some risk there. And
Not to get too specific, I will, definitely can't.
I'm,
But it was a little, yeah,
Tron's a
it's
fan.
in the hat.
Yeah, Tron's an easy target, and I agree that there's some risk. And look, if Bitcoin ripped from here to the end of the year, if we ended the year at 300K or something, then I think we could have a pullback. But I don't feel the euphoria, and I think these longer 5-year trends are just they're just really strong. It's still the case that most institutions don't own crypto. I think that will change in the next 4 years, and they have a lot of money. It's a tanker, not a speed ship. Yeah, I'd add one more thing that's been on my mind lately, which is the Bitcoin obituaries chart. The
Oh yeah, moral well, yeah.
Yeah, there's been few of those recently, right? Because most people now accept that Bitcoin is not going away. And one of the reasons I think we had these 70% pullbacks was there is not many value buyers of Bitcoin. It started to fall, and everyone was like, "Oh, it's over. It's going to zero." But if people no longer think it's going to zero, I wonder if the cushion comes in sooner, right? Like if we pull back below 100K, are there people who are going to buy instead of letting it continue down to 50 or something like that? I think that may play a dynamic here as well.
Very interesting. I think, as I've tried to talk myself out of this 4-year position, right? Because what I don't want to end up is this time is different, right? That's my fear, is that,
Right.
maybe this is just a symptom of we're actually later in the cycle. I think this time is different. And now I'm willing to discount my own belief. But I think that, the Trump election, as I think about it, I mean, my unofficial capacity as the Bitcoin historian, when Trump was elected, I basically felt very strongly that the early days of the industry were over. That there was, this set of potentialities where Bitcoin and cryptocurrencies could have hit the mainstream kind of investment world and financial world in any number of different ways. And I feel like, and I'm curious your analysis on this, is that a world where the United States is the country that is kind of spearheading the movement into the next financial era through Bitcoin and cryptocurrencies, that feels like a world where the amount of potentialities is just significantly reduced, right? So that means the existing financial structure is going to maintain itself. It will remain intact, maybe, and then that this is going to make a migration to the new world. But it seems like, because early on there were so many revolutionary potentials, right? There was people wrote blog posts on Bitcoin talk about, maybe you'd have nations get together and they would, adopt a Bitcoin standard. They would sort of be this, alternative economy. But a world where the U.S. is leading just feels like there's a material difference between that and the early period of Bitcoin.
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
I think that's interesting. It's more evolutionary than revolutionary, is probably a way of thinking of it. But I still think it's a really important and significant good in the world. I think if you imagine a world without Bitcoin, the US is unconstrained in its ability to print money because who are you going to fall back to, right? The US, yeah, is unconstrained on the debt and deficit sides. In a world where the US embraces and allows Bitcoin to exist, I think it has a significant impact on how the government operates at a point. I think it constrains it. It could co-opt it eventually. But I do think it's more evolutionary than sort of parallel world structure, which I know is discomforting for some early Bitcoin adopters who imagine
Yeah, a
sort
lot
of
of people, I mean, the classic early adopter image that I have is Amir Taki with an AK-47, like in the middle of the desert, right? Like that potentiality for Bitcoin, it just feels like, we're not going to see that. But there, that was a potential for a while that maybe you would have.
yeah, I agree with that. I think you're probably I think you're probably right about that. Again, I still think it has a massive impact and a massive positive impact. But yeah, it's less Mad Max and more evolving the ecosystem and constraining the ecosystem in very positive ways. Yeah, I'm still very bullish on what Bitcoin means for the world, but more evolutionary.
So I see two sort of things, right? One where I think, and I'm curious how much you think the continued success of the Trump administration actually changes this 4-year cycle dynamic, right? Because I think that a world in which the administration is successful, it's able to pass all this legislation, and we are able to connect the financial system, to the crypto world in the way that we want to, looks very different than I almost think about it as the if I were to write the story of, here's how this cycle should play out according to, if we have another classic, 4-year correction, I'm the Democrats. I'm waiting around for this 50% correction. And then I'm pouncing, right? I am going to kind of attack Trump on all sides and say, he fueled this, outrageous bubble. The bubble collapses, and then into the midterm elections, we have a referendum on crypto. That sort of to me seems like if you're running this playbook of the 4-year cycle repeats, you end up in a situation where maybe crypto is politically imperiled again. But if not, right, the Trump administration is very successful. There's kind of a steady advancement of financial institutions plugging in. We see the Visas, we see the Chases actually go through with launching these products. Maybe that smooths out the curve. So I guess the question, minus my very elaborate example there, is essentially how much do you think the success of the regulation roadmap actually goes into your assessment and your declaration of the 4-year cycle being dead?
Yeah, it's a great question and a great framing, and it's a good risk to consider of that collapse time to the midterm elections, which would be dangerous for crypto. Um, my base case is that the genie's out of the bottle and it won't come back in. And I would note that the Genius Act passed with 100 votes from Democrats in the House. It's actually somewhat bipartisan. There's a very squeaky part of the Democratic Party that's anti-crypto, and I agree that in a sharp bear market, maybe with some scandals tinged to it, they would pounce on it. But I don't think that's the base case. I think the base case is that crypto demonstrates its value now that it's able to interact with the real world. The U.S. is relying on stablecoins for financing its debt. Bitcoin is broadly held by pensions and institutional investors, and that part of the market just has escape velocity from a regulatory perspective, right? It's like the internet after the 1996 laws. It's now out there, and it's demonstrated its impact on the world, and you can't stuff it back in. So your scenario, the negative scenario you played out, is possible and would contribute to a 4-year cycle. It adds cyclicality to crypto if it happens. or maybe a pro-cyclical nature to a downturn. Like a downturn begets more downturn if it's time to the election. Um, but my base case is it, it's actually bipartisan. The majority of Americans want crypto to succeed. It's important for our national security interests. It's important for our national economic interest. Wall Street is now behind it. I think it's out of the bag, and we're in this new, pretty good regulatory world.
Well, it seems like in 2021, right, there was a lot of, you go back to the super cycle thesis, which you referenced a little bit, right? There was this idea that, El Salvador had adopted, maybe you'd see more nations. Michael Saylor was adopting, right? But we saw that those ended up being little pockets. So I guess like why, is it important? Are you saying that it's important for there not to be a drawdown in order to see this advancement? Because I feel like to some extent institutions aren't they becoming more accepting that Bitcoin is just a volatile asset, and maybe success for Bitcoin is and being less volatile is you see a 40-50% correction, and that's still a tremendous improvement on past cycles, right?
Yeah, and I think that's the case. I think 70% corrections are in the past. I don't think we'll see that again. I just meant from the political standpoint, if one of the risks to crypto long term is a dramatic swing in the policy, I do think a market where crypto draws down substantially and Democrats focus on it is a potential scenario where there's risk. But again, I really don't think that's the base case. I think once we have regulation and crypto is in Wall Street and in portfolios broadly, I just don't think it goes back. I think we're in a new regulatory world. I think the ETF is a good example of that. Like we can't not have an ETF. We have an ETF now. It's not going to disappear, and it's sort of a one-way door. And I think from a regulatory perspective, we're moving through those one-way doors. We moved through it on stable coins. We're moving through it on market structure. I just think we're in a pretty strong place as an industry now.
And so I guess the last question I have on the institution side, or just the next question I have is, so do you think that part of it is just you're saying that the education has become so pervasive amongst these institutions that essentially that's the factor that diffuses the 4 year cycle at this point?
Yeah, and just that they're slow moving. They don't move with the speed of retail investors who moved in and out of assets on a 4 year cycle. As soon as the market turned, they were out. That's just not the way institutions act. They're allocating for the next 10, 20 years. Maybe listeners who have a retirement account from their job, it's not something they think about. They just invest in it every 2 weeks without even imagining what they're doing. That's sort of the way it happens in this space. So once you've made it into the club, once you're part of the portfolio settings, the market could be up or down. They're still going to be buying, and they just move at a different pace. It's like a different kind of investor. So I think that's going to play out for a decade. I think ETF flows as an example. We did $35 billion in year one. I think we'll do 50 billion in year two. I think we could do 75 billion in year three. I think we could do more than that in year four. That's what ETFs tend to do. Flows tend to increase over time, and I think that's what we're going to see from institutions. I just think they're moving into crypto, and I think that's going to take multiple years, and that's going to overwhelm the sort of 4 year cyclicality.
Yeah, I think you're seeing a number of things that just paint to this idea that it's going to be a long cycle, right? You had the ETF, even if we do have some cyclicality, there's some resemblance. It's going to be long. You had the ETF launch, we've been above all-time highs since February of 2024. With the kind of Bitcoin treasury companies that are coming online, and thinking that maybe a Jack Mallers or Adam Back may be delayed from buying a lot of Bitcoin until 2026. So I'm very conscious of those factors, but old habits die hard, and I'm really, because I just to go into the story well, I remember sitting at a breakfast with Barry Silbert in 2019, and he was of your opinion. He said the 4 year cycle is dead. He said and I said how we're gonna have the halving. This is gonna happen all over again. And he said, well, everybody knows about the halving. And I said, do they know about the halving? I was like, they might know something about Bitcoin, but they don't know what it means. But I thought it was interesting then. It's like, there's this idea of the longer you get in the space, right, you kind of think that everybody knows, right? Everybody has priced it in, right? Barry, one of the great businessmen of our space, fallen on, a little bit of hard times recently, but, built very great companies. But I think that the trap that maybe he fell in that instance was just sort of thinking that, just assuming that everybody, just because you know about Bitcoin, you really know what it means for Bitcoin to be so scarce, right? Because even in our own, lives, I think back to myself now, seeing Bitcoin progress in price. I wish I worked harder 4 years ago. I felt like I worked as hard as I could have, right? But now I'm almost like, okay, what was I doing, right? Why wasn't I? I should have been, kind of selling everything that I could and really kind of running it, right? So it's like, how do you price in that, right? Because maybe I don't know, you speak to your own experiences here, but in my life, I feel like I only just understand more deeply how scarce Bitcoin is, like over time, and I don't know how to tell people that because I can tell them that colloquially, but then to actually get it to like dictate their actions and make an impact, it's a second order effect, I think.
It is definitely it's definitely challenging. We do a lot about talking about that absolute supply versus the absolute demand, which you can measure. ETFs and companies are buying 5, 6x all the new supply. We talk about the relative scarcity of Bitcoin versus gold. Gold inflates at 2 to 3 times the pace of Bitcoin today, and that will probably increase, and Bitcoin is shrinking. So I agree. The longer you dwell on it, it's hard to grok. I think my answer to this time it's different
I
problem.
mean, I agree. I'm not hitting you with any numbers here. This is just
No,
raw.
no, no. I'm with you. I think when you say this time is different, which is sort of what I'm saying, you have to say why. And I think what separates this moment from the last cycle and the cycle before and the cycle before that is we have two whys. The whys are institutions are allocating, they control most of the money in the world, and they move slower than retail. And then the whys are, for the last 6 months, we've been on a new regulatory journey that opens up the market in enormous ways. And if you go back to the last cycle, what was the why? We have DeFi. Like, that's not as powerful a why as the largest investors in the world are now allocating to crypto in size to the tune of like $40 billion a year in ETFs. Or we now have crypto regulation that lets Wall Street interact with crypto. Those are much bigger whys than we have DeFi or we had ICOs and Ethereum, which was like the last cycle why.
A very retail driven cycle.
Yeah, yeah. The first cycle was people can buy Bitcoin. That was a big thing. But we just learned, and then we had the 4-year cycle after Mt. Gox blew up. But the last two, there wasn't a reason to expect it's different. I do think this time there are those two reasons, which institutional purchases and regulation. And I just think those are very big factors.
Interesting. Yeah, I think that maybe I would ask you, maybe as a thought on this, is just, do you think it matters to the end retail person like myself, or the hodler? Because I think the way, why I feel so much emotion around this question is I think, I've relied on this 4-year cycle to kind of dictate, how I think about, my investment, my savings, just how I work in the marketplace, and things like that, right? So for me, it's sort of like you're asking me to get rid of my childhood blanket. My childhood blanket is, we have this 4-year cycle. I feel like I can plan around it, right? It gives me some sort of structure to think about, how I approach the Bitcoin industry, and it's you're sort of taking that from me with this statement. So I guess what would you say to us folks who really want to hold on to this notion?
For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com.
As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
Pete, I don't mean to steal your childhood blanket. What would I say to that? I would say just attenuate your action, right? Like the risk I see for people who feel strongly that this 4-year cycle will repeat is that they'll step out of the market and then the market will pass them by. And that will be a real challenge. And so to the extent that people are planning to do that, maybe do it in half or maybe do it at a lower level to make sure you have And I know most real hodlers do this. They don't step out of the market, but make sure you maintain sufficient exposure that if these two factors, institutions and regulation, really do change the game, you're not at zero. But look, no one cries that much over taking profits on a position after a good 3-year run. So I'm not against that. I would just say be open to the idea that this time it's different. It's happened 3 times. That doesn't guarantee it's a fourth. It hasn't happened 50 times, right? It's happened 3. If you imagine flipping a coin, you can get 3 heads, but that doesn't mean the fourth one will be a head. So I would just say, yeah, it just be open to the idea that it may be different. It may be.
I am open to it, but I think it sort of it says a lot of different things about where we are just in the history of things, right? And I think that if we accept that maybe we're out of the early part of the Bitcoin story, right? And it sounds like you would accept that
Yeah.
maybe more now, right? So then, what is this middle period, right? It sort of opens this kind of messier question of because when I've been speaking with people, like Nolan Bowerly over at Roxon was a good old friend, old CoinDesk guy, we're saying like it's 96, 97. Maybe we're not 99, but man, it sure feels late, right? And we're now in this period where, we're not early anymore. We're in this middle section, and so what should we expect of this, middle ages of Bitcoin, right? We're crossing the chasm into early majority adoption, and yeah, what does that look like, I guess? And that's the part that makes me uncomfortable, right? It's like I understand the rhythms of this early market and just kind of I don't know what to expect from this new market, right? It seems like it brings kind of all these like potentialities that feel elusive.
I agree. I think the analogy I like to make is like the Facebook IPO, more so than the internet bubble, because the internet bubble is so charged with emotion. Like if it's 99, we're panicking. If it's 96, we're running into it. If it's 2002, we're buying Amazon stock. But the Facebook IPO is more to me like the Bitcoin ETF launch, which was prior to the IPO. Wall Street was very skeptical of social media and very skeptical of this business that didn't really generate revenue from ads. They didn't understand its value. And it came to market and sort of went nowhere for a while. But it came to market at a $100 billion valuation. Today it's 1.7 trillion. That's a 17x return over 13 years. That's not really bad. Is Facebook as exciting as it was when it was just on college campuses and you had to be in the know? Absolutely not. But did 90% of its value accrual take place after the IPO? Absolutely. So is Bitcoin as fun as it was when it was on message boards and P2P meetups to buy it? No. Is it as volatile? No. But is most of the value accrual still to come? I think that's the case. Could 90% of its value accrual still be to come? Absolutely. Could it 10x or 17x like Facebook did from here? Absolutely. So I think that Facebook IPO moment is akin to the Bitcoin ETF moment. And maybe that's the pattern we should expect, which is like something like a somewhat boring grind higher, but grind a lot higher, right? Not like 100 to 200K. This is 100 to a lot. And I think that's the paradigm that my mind is in.
Yeah, I think maybe to make a concrete example of this, melding that I find, sort of odd is that, I've kind of thought that the space has been for a long time in a competition of, what will be the rails or what will be the actual makeup, like technologically, of the actual backend systems that these run on. And it feels like with the, White House and America doing everything it's going, we've kind of pushed aside this messy technological question. And I'll give you a specific example. So, the idea that a fractional share of MicroStrategy or Strategy, which is a Bitcoin-backed stock, is currently trading on Solana across major exchanges. Like that is something that exists here and now in crypto. That if you were to show somebody that 4 years ago, it's a platypus, right? It's like you would be like, what, who would have constructed such a thing? Where it's like an equity whose value is somehow tied to Bitcoin, issued by a regulated entity, but it's on Solana, sort of in a sandbox from like an exchange, right? And or even like you're starting to get the Bitcoin treasury companies, right? It's sort of even the idea. It's like these are public companies, but they're Bitcoin companies. They're moving to a Bitcoin standard. but they're regulated and they have to do sort of these disclosures. So you're getting, I think, all these sort of like very odd creations, and as someone who I appreciated the technological competition era because it felt like the questions were easier to grapple with, right? It was like, are we going to have one blockchain or multiple blockchains, or can these blockchains scale? And it seems we've kind of like pushed aside those questions, and we're ending with just some odd things, right? I don't know how to think about a fractional master MicroStrategy stock on Solana. I know that it exists, but is that going to be sort of how trading of this is done in the future? I feel like I've lost an ability to assess that. So I don't know. How do you think about maybe in this specific example these kind of interesting kind of creations that we're seeing?
That's a funny circle and a good example. Look, I think they're interstitials. And I feel that way about my own business, right? Like, why do we need an ETF to own Bitcoin? I have a really good answer for that right now, which is the existing pipes don't fit for Bitcoin for most investors to own it in the way they own most of their assets. And it's just too hard, right? An ETF makes that push button simple. Why do I need Bitcoin in a truly blockchain oriented financial system where self custody is easy and has good UX? That's a much harder thing for me to answer. So I think the answer to your question is it's just interstitial. We did build
That's the
effective
right word. Yeah, very good word for that.
yeah, we built these effective rails and now people are like putting things on it, but we're not all the way to the mature end state when we won't need a Bitcoin ETF, right? I'm comfortable saying that. I still think there'll be asset managers that supply IP, but we won't need these interstitial wrappers. And I think that's what you're seeing with the MicroStrategy on Solana. Although that is a really fun circle.
Right. Well, it's sort of like it's like, do we have to have conviction about, because your declaration here is like the end of the 4-year cycle, right? So to me, it's like I think I would be more comfortable accepting that if we had like a real strong idea of how the rails will sort of operate. But again, I'm sort of struck by, as a student of Bitcoin, it's we're still searching for like how do you scale blockchains, right? That feels like a core question in the space. And so you simultaneously have this, I agree, is overwhelming kind of retail and institutional support that we haven't seen before. But at the same time, it's like, have the fundamental questions really changed, right? Has there been a significant advance in terms of how the actual technology works? That's where I sort of lose it, and I'm sort of like, that keeps me from capitulating and saying, okay, this time is different. I would like to have that certainty, but I'm sort of starting to wonder, okay, am I ever going to get that certainty, right? I don't know how to think about that.
Yeah, that's an interesting framing, and bandwidth is an interesting argument for why the last cycle started, right? Or stopped rather. We sort of hit the limits of what we could do. So that is an interesting framing. I do think
Right.
I think the technology is getting better, but it does have to run ahead of demand. I think that's a fair thing to say, and it could be a limiting factor on this cycle. So yeah,
Yeah.
you're giving me things to think about.
Maybe I'm talking you out of your position here. I love
Yeah,
that.
you're blending me. I'm still anchored on 2026 being a good year, but
Well, so
yeah,
so that I can agree with. I do think so, but I guess the question that it's just how much confidence can we have, and I feel like now it's like with what the Trump administration wants to do. You take a question like, okay, they want to advance stable coins internationally, grow the treasury bills market. They want to have the United States dollar benefit from this appreciably, and then you think like, okay, is the core technology, can the core technology actually support that? With a question like them building the strategic Bitcoin reserve, it's like, can the government hold a bunch of Bitcoin today? Sure, yeah, the technology for that is there, right? But then, sort of the world that's envisioned, I think, by this administration and sort of this U.S. led kind of crypto world, suggests. I don't know. I'm sure you follow the international news, right? The South Korean news recently, it's they're talking about losing financial hegemony. They want to get their stablecoin bill enacted now. You're starting to hear rumblings of China, kind of starting to talk about, getting an RMB stablecoin. So we're going to see this tremendous stablecoin competition as well. And then it's sort of like, okay, well, do blockchains support that? Even if the will and the demand is there, that's a question that I have. Yeah.
yeah, I think it's a good question. I think maybe I'd tweak the question to be like, do sufficiently decentralized blockchains support that,
Yeah.
or are we going to get almost blockchain and name only support to support
Well,
that.
there has been a weird renaissance of the private blockchain era. If you're of 2014 to 17, if you remember, I think I said to somebody at a concert conference recently, I said it almost feels like the ghost of Tim Swanson, where the bank consortiums and sort of all this activity. That's a deep cut. If you follow me
No,
on that.
I love that cut. It's a very good cut. I think that's true, and there are lots of questions about the centralization or not of various layer twos. I
Well,
think
do you expect competition on the rails? Because I look at these institutions and I think of what is their incentive to actually plug into these open markets at this time, especially if they're really just doing stablecoin type operations.
I think it's unknowable. I think they're going to experiment with everything. I do think it helps that many large firms have launched on ETH as an example, with tokenized products, so it's sort of gotten a blessing. But look, I think they're going to experiment on all of these. I think they're going to experiment on private networks, on quasi-private networks, on ETH, on Solana, on Bitcoin layer twos. I think they're going to experiment with everything. Is my base case. But I don't think anything will slow down the stablecoin train unless we get to the point where fees to move it just really blow out, which I think at the scale of growth that even the US Treasury is expecting, which is like 3 trillion of stablecoins in 4 years, I think the existing networks could scale to handle that. Um, it's not overnight. It's not the same pace of growth that we saw in like NFTs or DeFi, which really broke the back of blockchains. It's a little bit slower than that, but I think they'll be able to scale to keep up. We'll see.
Interesting. Well, of course, a lot to be seen about what will happen this cycle. We're hearing, strategic Bitcoin reserves still, potentially on the table. At least some White House officials coming today and, saying that there's, will be potentially some support on that side. I guess a question that I would have is on the sovereign side, right? So you've talked about institutions, right, as Wall Street and sort of American finance getting very comfortable. International institutions, do you think that they are also at that same level of readiness? Because we've seen a lot of American CEOs from big financial companies. Feels like the last week of CNBC has been regional bank heads, all coming out and saying that they're going to turn on Bitcoin and crypto. We really haven't seen that internationally. How do you explain the gap there?
I think it's the same growth curve, just at different phases. It's an exponential growth curve. It's just that the sort of bank wirehouse institutional curve is so far down that now the doubling is very visible, right? Like we've seen a steady acceleration. We're past the hockey stick point. I think nation states are moving in that direction, right? It's not just El Salvador now. We had Pakistan a little while ago. We have Bitwise is talking to multiple sovereigns. We had Abu Dhabi. We've had a few others. I think it's moving in the right direction. We're just earlier in the doubling phase. But look, I think if the U.S. actually buys Bitcoin, I can't imagine what that does to the price, or to the game theory of other countries moving into the space. I think it would be. I don't think that's priced into the market at all.
Well, maybe we'll do one kind of final thought question. Maybe tie in some themes here. The 80,000 Bitcoin whale. This was an interesting topic from the last week or so. Kind of comes out of nowhere. We find these old wallets start kind of moving around July 4th. I thought that was, in my head, I'm like, okay, this would be the greatest stealth advertising for a strategic reserve ever created. Obviously, we know now that that probably didn't come to pass. But we do have this idea that this kind of old Bitcoin OG, decides to cash out at that level, right? You're talking about $9 billion that was probably worth pennies, right, at the time it was acquired. What do you think this says about the market psychology? How do you think about the fact that it does seem like some of these older coins are being moved on the market? There's a lot of people trying to understand, like, what does it all mean? That seems a bit elusive.
Yeah, the ship of Theseus, the sort of
Yeah.
the ship that sets off and you replace one plank at a time, and you end up at the other side of the ocean, and none of the original planks were there, but the ship is still there. It's still the same ship. I think that's like Bitcoin's journey right now. You mentioned at the top that there was this like early OG energy that was more revolutionary than evolutionary in Bitcoin. And some of those people are not happy that BlackRock has a Bitcoin ETF or the US government owns Bitcoin or that it's entering Main Street and Wall Street. And so they are leaving this ecosystem or cashing out because it's no longer the Bitcoin that they fell in love with. And they're being replaced by other people that are later adopters and maybe more comfortable with Bitcoin today than they would have been with Bitcoin in 2010. Um, that gives some people pause. I think that will continue, right? I think that will continue. I think some of the OGs will continue to sell, and new institutional owners will buy it, and the nature of Bitcoin will change slightly. But I don't think the core of Bitcoin will change. So I don't think this ship of Theseus transition will change the fact that Bitcoin is strictly scarce. I don't think it will change the fact that you can hold Bitcoin without relying on a government or a bank. I don't think it will change the fact that no one person can dictate how the chain works or change the terms of service. I don't think it changes that Bitcoin separates state from money for the first time in real history. It just speaks to the evolution of this space. So I think it will keep happening. It's one of the reasons the price isn't already $250,000 given all the demand. And we should say thanks to the OGs that are cashing out. God bless them. And we should all keep building in Bitcoin at the same time.
Well, interesting. Yeah, funnily enough, my next podcast recording will be with Gabe Shipton, the brother of Julian Assange. So it'll be interesting to see what he makes of this changing makeup of Bitcoin. Matt, appreciate you coming on the podcast. Where can people find out more about all you're doing at Bitwise and read some of your great thoughts on
Oh,
something?
thanks so much. This was a lot of fun. Come to bitwiseinvestments.com. You can sign up for my weekly memo or find me on X at Matt_Hougan. It's got that funny U in it, Hougan. But that's me.
Awesome. Well, thanks for being here. We'll, of course, be with the Blockworks team this October out in Digital Asset Summit in London, in the UK, maybe the birthplace of Bitcoin. I'll be there bringing a Bitcoin perspective to the crypto institutional conference there. You can go to blockworks.co, find out more about their great events. Matt, again, appreciate you being on the pod. This has been Supply Shock, a Blockworks podcast.
Thanks for having me.